All right, hello everyone and welcome. This is the 181st Scientific Governance and Risk meeting here at MakerDAO. My name is Peyton. I go by Pros11 online and I'm one of the governance facilitators here. I'm joined by a bunch of awesome Maker people who both work with the protocol and are just generally interested in it. And these are our kind of weekly talks where we talk about what's going on, what risks the protocol face, and what future discussions we need to be having. As usual, we do have a bit of an agenda to get through, but I will go over some housekeeping matters first. This call is being recorded, so please try not to talk over one another. If you would like to speak, you can utilize the raised hand function. It makes it pretty easy to be called on, or drop a line in our chat. I'm also happy to read out questions or comments if you're unable or otherwise unwilling to hop on the mic. Awesome. So that about does it for ground rules. This is an open meeting, so if you have questions, if there is anything you want to contribute, please do so. We love to get as many perspectives as we can during these calls. So turning to our agenda here, we'll start as usual with a brief governance update going over the votes, the maker improvement proposals, and what's happening on the forum. Then we'll jump into some initiative updates. Today we'll talk about Layer 2 and MakerDAO, as well as some of our Twitter social media, accounts and how they're performing. And then only one discussion topic today, but it is a beefy one, and that's real world assets collateral. So I believe several members from a working group on onboarding real world assets collateral will be speaking today and giving us some things to discuss. And after all that, if there's still any time, we'll have an open discussion portion. So if there is anything you'd like to talk about today that isn't listed on there, feel free to drop it in chat and we'll try to circle back to it when appropriate.
Sorry, I got dropped out.
No worries, Bourbon. All right, we'll go ahead and continue on to the votes update then. So a pretty light week for polling for us. We had just 2 weekly polls. The first were the offboarding parameters for TUSDA, basically determining how we would handle liquidations for that asset type. There are some, I believe it's MIP 62, the offboarding collateral MIP considerations that have to be put in place. So that will not make it to an executive until all those prerequisites are fulfilled. The other poll we had was to reinstate the surplus buffer LERP. This was a gradual increase from 60 to 90 million of a surplus buffer level. That did fail. So the surplus buffer will remain at 250 million unless further action is taken. And finally, on Monday, we did have the conclusion of a green light poll. The no's did outweigh the yeses on this one. However, we will still add that to our prioritization sheet as normal. Cool, that should take us to the executive proposals. A bit more to report on as we have both last week's executive, which was passed and executed, and an out of order executive that we took care of yesterday. Thanks to some quick voting by delegates that has already been passed, and we're waiting the customary 48 hours for that to be able to execute. If you're looking forward to tomorrow's executive, we got 3 main points on there: onboarding the Curve staked ETH pool as a collateral, introducing a rate limiter to the flapper. That is the mechanism which would limit the total amount of flap auctions or our surplus auctions that can take place at one time. And then finally, there's some payments to process for the Immunifi bug bounty program. Awesome. That feels like enough talking for me, so I'm going to go ahead and kick it over to Pablo, who's got a pretty beefy MIPS update as well. Oh, I see your mic went off, Pablo, but I cannot hear you. Sorry, Pablo. We did test it right before the call. But technology likes to be funny like that.
Is it working now?
Yes, it is fairly grainy, but we can't hear you.
Okay, I hope it's working now.
Yeah, that's good enough. Yeah, give it a go.
So, as you were saying, yes, it is indeed a bit of a media presentation. I'm going to try to dash through it while being understandable, still understandable, hopefully. So next slide, please. Thank you. The formal submission window for March closed yesterday, and we've had 9 formal submissions. Let's take a look at them. Thank you. So we have MIP 61, the recognized delegate compensation, which has been being trialed since October 28th, 2021, I believe. And it has finally been formally submitted. We've also have a number of coordinate budgets for real-world finance and for GovAlpha, including GovAlpha's MKR budget. Next slide, please. Thank you. So we also have MIP 41C5, SP5, which affords the facilitators for the MakerDAO shop, along with the whole core unit. So since MakerDAO shop has no budget, and it's been made clear to every party that the intention behind this proposal is to afford the core unit, we feel that this proposal is enough as it is in order to afford the whole core unit. As you know, the core unit affording process is getting revised. Hopefully a new process is forthcoming, and we will no longer have to use this kind of ad hoc solutions. Next slide, please. We also have a MIP 4 C2SP 17 amendment, which amends MIP 64, that is the bug bounty program run by Immunifi Security, with an expedited process for small bug bounty payouts. This also entails an addition to their budget. Next slide, please. We also have 2 new Keeper network onboardings for Keeper and Gelato. Next slide. And finally, for formal submissions, we have a declaration of intent to invest in short-term bonds. All of these formal submissions will go up as ratification polls on Monday 14th. Next, we'll move to proposals in RFC, proposals that are requesting comments. Most of these will be in principle eligible to enter April's governance cycle. Next slide. We have MIP 66. It's a new proposal from Pairwise that intends to integrate Pairwise with MakerDAO to provide fixed rate DAI loans. No longer a core unit onboarding proposal, but rather a top-level MIP. We also have MIP 67, which intends to formalize the methodology and high-level process to evaluate the structured financial transactions made under the MIP 6 application process. And finally, MIP 68, Monetalis Vault, which is a self-contained collateral onboarding MIP that will onboard and activate a real-world asset vault backed by the assets of a trust arranged by Monetalis. Next slide, please. We have coordinate budgets for governance communications, for data insights, for strategic happiness, and for protocol engineering. These have been posted very recently. Next slide, please. We also have a coordinate onboarding proposal set for the events core unit, whose mandate is to provide the best MakerDAO branded event experience to the crypto and maker community, including industry professionals, influencers, and enthusiasts. Next slide, please. Thank you. We have a MIP 4 C2 amending proposal. This is the one that amends the coordinate onboarding process. In case any of you want to co-author / take lead of this proposal, you can start collaborating on the pull request. I know that Team Black has already made some, made some comments there. Team, feel free to reach out to me and we can further arrange this. We have a MIP 7 amendment, MIP 7, that's the collateral onboarding domain teams, that adds a description for collateral engineering services as a collateral onboarding domain team. This domain team is being onboarded via a proposal that I'll be mentioning in a minute on the upcoming slide. We also have a MIP 4C3 that amends the MIP 64 bug bounty program to clarify the amount to be paid out for critical web bounties. This one enters the weekly cycle and currently has a running signal request ending today. Upon the passing of this proposal will go up as an on-chain poll. And finally, another MIP 4C3 that amends MIP 62, the collateral onboarding process MIP that describes how Vault users will be notified of offboardings. In this case, to remove the references to the offboarded content production core units. Next slide, please. And we are reaching the very end. Finally, we have two mandate revisions, one for governance communications and one for data insights. A special purpose fund to allocate 50,000 DAI for the MakerDAO event in Amsterdam. This one comes from the prospective facilitator for the event's core unit, John Perry. The onboarding also of a collateral engineering services as one of the collateral domain teams, and the modification of the collateral application form that amends it to contain more relevant questions that allow core units and the MakerDAO community to be better informed by the applications that use it. Sorry, it's been so long. Next slide, please, so that I can say bye-bye. Bye-bye. Thank you.
Thanks, Pablo. Quite a lot of MIPs this month for sure. So if you are the type of person that likes to wait till the end of the month before reading them, would advise against that this month for sure. So there's a lot of stuff to get through. Cool. Appreciate the MIP update. That'll take us to our forum updates. And looks like Artem is at the ready.
Yep, just posted the link on the chat. So welcome, everybody. Happy Thursday. So this forum update covers March 2nd to March 9th, yesterday, and we'll begin with our top announcements. Beginning with the PE team announcing a new set of work streams for their core unit, which also falls in line with their recently proposed budget request. The new formalized team structure assigns clear individual ownership to improve transparency and promote an architectural vision and strategic oversight. In part of setting up the team and their new structure, PE is also proposing to include 3 new people to their team, which include 1 product manager / coordination engineer and 2 smart contract engineers. Also, make sure to check out their post. They offer a visual breakdown of the PE team structure and their mentioned workflows. Next up, in response to a vulnerability identified in the protocol on March 3rd that involved the DSS flash and emergency shutdown process, PE team states that there is currently a mitigation plan involving a module that can be deployed, which can permissionlessly disable DSS flash after an emergency shutdown is triggered. This led to an out-of-schedule executive proposal on yesterday, March 9th, which passed and introduced the new module, Flash Killer, into the protocol as a temporary mitigation in the case of a post-shutdown flash load vulnerability. And next up, Strategic Finance announces their very first quarterly strategy review meeting happening tomorrow, Friday, March 11th at 5 p.m. UTC. This meeting is hosted by Strategic Finance in partnership with Growth, PE, Risk, and Real World Finance, with the intent to review Q1 of this year to discuss strategic focus areas as well as key performance indicators and gather all together to align on priorities and discuss any current challenges we are facing. This call will flow as a dialogue between core units and MKR holders. Participation is highly encouraged, and the call link to join is available on the forum. Oh, so it's covering Q4 of 2022. Sorry, guys, not Q1, although it is coming to an end in a few weeks. All right, moving on to our top discussions. In response to the recently delayed fire drill as part of the Immunifi security mandate, Psychonaut shares his concerns on whether current executive spells can be passed quickly enough during an emergency response. In order to test this concern, he suggests that we declare a random fire drill every month where delegates will be asked to sign a message and the reaction time will be measured and recorded. In addition to this, Psychonaut also asks the community a set of questions via an informal poll. He asks, and this is paraphrased a bit, what is the recommended frequency for fire drills? How quickly should delegates react? And should we incorporate a reaction time measure into the recognized delegate compensation modifier? And next up, GovAlpha submits a postmortem for the offboarding of content production that happened earlier this year. The postmortem includes a timeline of all related activities to the offboarding, as well as activities happening after their offboarding. Furthermore, it includes several issues that were discovered through the first-time event in the DAO, which includes offboarding expectations, returning core unit funds, unfulfilled commitments to contributors or third parties, and entanglements of key infrastructure. GovAlpha also proposes a set of recommendations for the future. And during the last couple of days, the thread got a little hot with a lot of comments and discussions happening by various members and core units, including ex-facilitator Seth. And next up, finally, Thomas provides a list of suggested topics for Governance Communications' upcoming issue discussion call happening on March 23rd. He lists these topics in the form of a poll and asks the community which of them is most pertinent and pose the greatest interest. And the topics mentioned are how to meet our growing external communication needs through social media, website, and branding. What steps would help improve the core unit budget modification process? Is real-world asset fast tracking a viable solution? How can we improve our onboarding process? And also open suggestions for any other topics. And moving on to our signal requests. First up, Psychonaut proposes several considerations and signals to the community to amend MIP 64 to clarify the critical web bounty amount and push it on chain for vote. And next up, we have GFX Labs, who introduced notional finance, an Ethereum protocol that facilitates fixed rate and fixed term crypto asset lending and borrowing, and is signaling whether to onboard a D3M for notional finance's 3-month maturity DAI lending pool with an initial debt ceiling of 10 million. Next up, we have Strategic Finance, signaling to onboard PAXG as a collateral type, which already has risk assessments and was previously approved for onboarding during October of 2020. Sebastian also states that PAXG market cap and liquidity has significantly improved recently due to current events and politics. And finally, real-world asset fast tracking signal request ended yesterday with the winning vote being no. Just wanted to clarify the outcome. For any additional information and discussion on the signal request, please refer to last week's GNR call discussion. And that's it. For
Thanks, Darren.
well, just a little closure part. Couple more announcements, discussions, and help wanted available on the forum at a glance. So check it out. Thanks.
Sorry to step on you there. I appreciate the update as always. Awesome. So that takes us out of our kind of governance update section. And now we will go into initiative updates. I believe we are doing L2 first. Yes.
Hello.
Awesome.
Yeah,
Eric.
sure. Let's dive into it. All right, next slide, please. Okay, so I'm going to break this discussion down into a couple of parts, talking initially Starkware slow withdrawals, then I'm going to jump into the fast withdrawals as I wormhole, MCD on layer 2, and the timeline. Next slide. I'm going to try and keep it quick today, but there's a lot to cover as it's been an active last couple of months. So cutting this down into delivered, in progress, and then future work to do. So the delivered work, as I think we discussed earlier, there's been a lot of architectural discussion review between PE, between the Starkware Starknet team. So that's been completed. That then led to a chain security audit on the DAI-Bridge implementation, and that was subsequently followed up with a proof of concept that we the Starkware group shared with the Oracle's team earlier in Denver. Leading on to the in-progress work, there's a technical assessment that's currently underway between PE and the Starknet team. And what we're really trying to do here is akin to the collateral onboarding process, where you have collateral, it gets reviewed by risk, by the technical teams, and you have a disclosure discussion of these risks on the forum. We're trying to do the same thing with L2. So that's what's happening here, and we're hoping to release that in the next week or so, I think. In parallel with that, there's also an audit ongoing for events and message cancellation on Starkware. That should be due for completion at the end of the month. And there's also an ongoing discussion around circuit breaker considerations. And I think we'll expect to have something in the forums in the next week or so on that topic as well. So the outstanding tasks are just wrapping up the Oracle's integration, deploying the UI SDK and integration on the front ends, which the front end in this case, the Starkware team is working on that. So it's a matter of providing them with the software development kit to integrate that. And then there's also cross-team integration. So making sure we have the forum posts and the community awareness already set up as well. And I see that, yeah, Louis is already working on the circuit breaker piece, but haven't merged it yet. So there's still ongoing discussion in that space, which is good. And then on the target side, so yeah, delivering the slow withdrawals by the end of the month. But the dependency here is really completing the audits, making sure that the events and message cancellation stuff is all good by the auditing team, and we should be good to go. So that is targeting as originally communicated. So lots of work there by Louis Maciek and the team. So looking forward to see that one come out soon. That wraps that up for the slow withdrawals piece. I'll move to the next slide, which gives a more broader topic discussion around fast withdrawals and the DAI wormhole. So much in the same fashion here. Again, what's been delivered, the Optimism wormhole contract's been developed, audited, and deployed on Kovan. Last time we gave the update, we were actually waiting on doing that deployment to Kovan, which has been successful. Oracles have also done a whole bunch of work this last month or so around their design document, proof of concept, also the integration and addresses on the testnet deployment, which has been great. We're also similar to the Starkware guys working on an SDK for delivering to Optimism and Arbitrum UI teams. We actually delivered that this week to them. So the next step here in progress is making sure that they integrate with their capabilities into, our wormhole capability into their front ends. And we also had a call yesterday with Chain Security around doing an audit of the Arbitrum wormhole contract. So that's progressing nicely. And the next item in progress is testing the Kovan deployment and Oracle's integration. So just making sure that these deployments all work and function as they should in a testnet environment. The upcoming work is completing all the Kovan, Optimism, and Rinkeby for Arbitrum tests. Once the audit's done on that work, and then setting up comprehensive monitoring and alerting for bridge invariants. So this is, again, one of those cross-team coordination tasks. So making sure that we have integration with different teams, everyone brought into our stakeholder alignment meetings, and making sure there's understanding of all the dependencies that are happening. And then, finally integrate those UIs and test them out. So once again, the target here, fast withdrawals for Optimism, end of, I should actually have Optimism and Arbitrum here, depending on how the audit goes, but I don't think there'll be any concerns because it's fairly similar, almost the same as the Optimism side. So end of March, early April, pending the audit. So again, tracking as expected, no surprises here, all looking good, which brings us to the next section, which is MCD on layer 2. All right, so there was a lot of discussion, I think, as we mentioned last time on this one in Denver, which was great to have the team all in one place. So we were talking about, how do we take MCD from layer 1 into layer 2, map out all the different modules that exist, and understand which areas need to be researched in more detail. So in progress, we have defining the MCD module behavior for L2. We need to do some upgrades to the Solidity version to make sure it's compatible for L2 environments. And there's also some complexity that needs to be documented and discussed. Especially I've called out here emergency shutdown. It's a complex module, how the way the end works and how that's going to function when there's multiple environments or domains of MCD operating needs a little bit more mapping out. So that's in progress. Future work is in further investigation into MCD modules. So yeah, again, the complexity of MCD really needs to be mapped out in a layer 2 world, and that's what a lot of the team is getting started on now. So how we manage debt and surplus management in an L2 environment. Alongside with that, we need to bootstrap a keeper ecosystem. And then as part of governance processes, we'll have the standard technical risk team assessments that have to happen to move this forward. Targets haven't changed here either. So we've got MCD on Optimism and Arbitrum tentatively targeting Q2. And I sort of restate there the tentative aspect here because it does depend on Wormhole. It does depend on the MCD layer 2 definitions, the modules, any changes we have to make, and any changes as a result of the Solidity upgrade that needs to be done as well. So there's a few things that are considered dependencies here, but I think that's all to be expected, and it's all being tracked as part of our stakeholder alignment initiative as we progress. Similarly, MCD on Starkware, I've still got the target as TBD, and we've discussed this internally that there's some pending Solidity upgrades again and further understanding of the Cairo code that we really want to see how the slow withdrawals progress, and then progressively move to the fast withdrawals and the Wormhole, and then see how the MCD can operate in the Cairo code environment. So a lot of work going on, a lot of cross dependencies, but it's all being tracked. Everyone's been joining the weekly calls. I think they've been a great success. And yeah, looking forward to keeping the train moving along, and looking forward to the end of the month where we get a bit closer to doing the launch of the fast withdrawals. So thank you everyone who's participated. And I think that wraps it up for me as a summary. Actually, I have one more slide. Yeah, how could I forget the milestones? That's like the main thing, right? I think I've covered them off, but to summarize, yeah, Starknet Dybridge, yes, end of March. Fast withdrawals, end of March. Starknet target mid Q2, TBD, depending on the dependencies I mentioned, and then L2 MCD implementations with again, those dependencies, but target end of Q2. So I think that wraps it up now. Thank you.
That's awesome. Thank you, Derek.
Welcome.
We'll pause for questions here. Well, it's quite exciting on the timeline to see some of the things come to fruition in a few weeks.
Yeah, looking forward to it.
All right, I didn't see any questions in the chat, so I'll give you one more moment to speak up here. Otherwise, we'll move on to our next initiative update.
Hi, everyone. Can you hear me?
Yeah, go for it.
Hi, Mariano here from Growth Core Unit. I will try to be short and sweet with this. We posted on the forum the whole process to request tweet under the MakerDAO official Twitter account. Just as important points and doing a brief of the post is we create a Discord channel to coordinate with core units. So everyone of core units that wants to post content on Twitter, please contact me or Cristobal in our Growth Public channel at MakerDAO Discord. We will share with you a calendar in which you can post the information that you want to publish. And don't worry if you don't have the actual tweet, we can help you with that. And also we can help you with the graphical pieces. And that's part of the preparation. And then we will coordinate with you the publishing date, right? As a little resume, we have on the right some of the things that we consider to publish. We have discussions around the future of Maker and DAI. We have Maker community updates. We have the core unit updates, which I think are very, very important. We will have monthly updates showcasing the work that is being done in the DAO. And obviously we will have the MakerDAO announcements, right? That we will be doing with partnerships or special initiatives throughout the year. So thanks. Any doubt, again, you can contact me or Cristobal in the MakerDAO Discord at Growth Public. Thank you.
Excellent. Thanks for that update. And I'm sure many of us will be using your Discord channel there to ask for some tweets. Any questions about that process? All right, not seeing any. Well, as a reminder for both the L2 stuff and the social media comms, any further questions, anything you want to discuss, forum's a great place for it. That way we can kind of log the discussions we're having and make sure they're open and available to everyone. Thank you to both of our presenters to give us an update on how those are going. So with that, that should take us to our discussion portion. Excellent. And I believe we are talking real world assets collateral management today. Not sure who's going to be kicking us off, if it's Will or Robert. Those would be my top two guesses, but maybe David as well.
Yeah, I think me and Will had the conversation that he would lead this introduction to the discussion and kind of start us off.
Awesome. Well, feel free to take it away.
Can you guys hear me okay?
Yep, there we go. Sound good, Will? Go for it.
This is for open discussion, just random thoughts.
I think Will from the Real World Finance Core Unit is
Okay,
going
real world. Okay. Yeah, just have some thoughts to share at the end.
I'm here also, and I'm working on this with these guys. This is Max from RWA company.
Hey, Max.
By the way, Will, we heard you at first, but I don't think we hear you anymore.
Yeah, let's see if the if you guys can hear me okay.
Yeah, there you go. Thanks, Will.
Cool. So yeah, we've got a presentation for I think next week that me and David is actually we're working together. So he's not there, but I can probably kind of get started at least with a flavor to these to the conversation this week. Yeah, so I think in terms of the work that the team has been doing, we had of course a pretty long February with a couple of assessments that occupied the vast majority of the team's effort. So the first one was published, which was the version 1 of Monetalis, which is up in the forums, and that's that of course there was a negative overview of that one, and the reasoning for it was explicitly stated in the risks of that. So we had that, and have a session as well to explain that to delegates. We're happy by the way actually to replicate the same session with the rest of the community if there's if there's an appetite. It's mostly a summary of the same content, but maybe with a little bit more like background and flavor to it. The other work that was key as well for the month of February was the review the review of success structures. So success had expressed intention to submit a upgrade of its existing vaults, but it hasn't published actually that that's no request, but it actually had expressed. So that triggered an event to have a review of that. So we started a review of that one with a legal engagement with Sherman in Sterling, and had a discussion on the risks and mitigants that were pointed out as an output of that discussion. So that's currently with Matt's team and CSS and 6S to review, and there is a intention, I think, of implementing a number of the mitigants that were pointed out by the law firm. And I'll let Christian, that I think is in the call as well, comment further if the community has got more updates. So on the 6S, we did not have a review of the credit at this point, simply because that 6S essentially has taken into account, like, to not move further with that upgrade at this point in time, and they will come back to us once they are ready, I think, to submit officially the request for an upgrade of the vault. And
I could speak. Sorry.
Go ahead. Yep.
At some point, I could speak as a counterparty try to onboard, as a party trying to onboard borrowers and dealing with RWF core unit when you guys are ready.
Yeah, sure. Yeah, and I think that are the two key parts. We've got a number of RWA other counterparts that are in pre-MIP process, that are essentially trying to draft their MIP and have engaged the team. And that's, I think, what community here is confusing. Is our pipeline is not our pipeline, is the DAO pipeline. They're simply kind of trying to engage the community actually to get the best possible written MIP for delegates to have the most amount of information before a MIP is published. So there is a number of initiatives that are in that pre-MIP stage. So RWA goes and its existing initiative is one of them. And yeah, I think Max, if you wanted to comment, I think on your experience,
hey, Will,
that would be useful for the community.
Well, it's Christian. Before Max jumps in, there are just a couple other things that I think the community should be aware of that we're working on. One is we're continuing to work on the SocGen transaction. There are probably some technical issues on SocGen that are being worked out jointly with Collateral Engineering Services. We're working with them to document the SocGen transaction. We have a draft loan agreement that we've commented on. SocGen has come back on. We've got a number of other documents that we have been working on with SocGen. So that is in process. The other things that we have been working on, you will have seen that Centrifuge has indicated a new structure. So at the beginning part of the year, we put together the methodology for structured finance transactions to give borrowers a sense of the type of deal structures that we were looking for, the type of protections and structures that a senior secured lender would expect, and a senior secured lender in the real world would expect. I don't think anything that we have published in the form regarding our methodology is any different than what you would see a senior secured lender in the real world actually looking for. We weren't very creative. We just borrowed heavily from everything else people are doing. So Centrifuge took that, actually, then working with me, we went through a couple of different iterations of different potential structures that would be flexible enough for them to use going forward, yet at the same time be responsive to some of the protections that we wanted to see in the documents. And those, let's be very clear, they're protections for Maker and they're not for anybody else. And, you know, so Centrifuge took that, came back to us, we looked at it, we said, yep, this looks like it's going in the right direction. Centrifuge then went off and prepared a at least a first draft of one of the agreements. And I am working to go through that and to provide comments to Centrifuge on that agreement. We've also had a number of kind of discussions with one of the MIP6 applicants and trying to reshape their proposal that involved looking at local law and creation of security interests under local law and how that would impact their operational, their operations, give us at the same time kind of the security that we were looking for. So, you know, we had discussions with external local counsel in Europe to, you know, understand nuances of local law and perfection of security interests in local law, which are all very different, I can assure you. What is done in India and the US and the Netherlands and the UK and Brazil and Chile and South Africa is all very different. And so, you know, we have to engage with local counsel to do that. So we've also been working on that. So I just wanted to supplement that a little bit, Will.
Appreciate the context there. Christian, go for it, Will, if you got something to add.
Yeah, no, just wanted to thank, of course, SocGen is one of the main evaluations that are currently ongoing. So it was good actually to provide as well the flavor of that. That's the goal for SocGen was, of course, the end of it by the first quarter of 2022, and just want to manage, I guess, expectations here with the community that due to a few delays, particularly more like contractual delays on the SocGen side, and there's also the smart contract actually review. There might be a few weeks of delay between actually the expected delivery date, which was actually end of the first quarter, so end of March, and when it's going to be. So it might be more towards April.
Excellent. Now might be a good time, Max, if you're still around.
Yeah, I'm here. Can you hear me?
Perfect.
Yeah. So this is like building a road across mountains, and it takes a while to build that road. But the second it gets built, we're going to have flow through it. And I showed up in August, joined up with Greg on this RWA company to start to help get some of our clients onboarded. And my first experience was bringing this client that was doing the film finance and then them getting rejected by this core unit. And when that happened, we went back to the drawing board, and it ended up being for the benefit, I think, of MakerDAO that rejection happened, because what we decided to do was just, let's raise the bar. Let's see if we can get some higher quality counterparties. What's the highest quality counterparty? Well, how about an American publicly traded bank, commercial bank? And we went out and tried to find that. And I'm very excited that we've got a MIP6 pretty much ready to go with an American publicly traded bank regulated by the FDIC and the SEC, and working with the RWF core unit has been instrumental in sort of getting that MIP6 into shape. They have been the sort of counterparty that we've sort of put it up to and gotten feedback and iterated. And yes, it's slow, but it's slow because this is a complex transaction and we're doing something that's never really been done before. And I think maybe what MKR holders should understand about this topic is that we have an opportunity to raise the bar and to set the standard and to do this right. And if we do it right, then it will accrue enormous benefits to both Maker and to DeFi as a whole. And what goes into making a deal, there has to be a legal entity set up in the real world. And there have to be transaction documents. And you also have to have a counterparty that understands what's going on, and you have to, of course, get them through governance. So these are all things that have yet to be done before fully, although Success Capital is live as sort of a model that's taught us a little bit something. Borrower versus lender perspective for designing a deal. I don't know. What is Maker doing to professionalize our approach? I think, like, Luca has tried to, and these guys at RWF Core Unit have really, I think, been on board with trying to find the highest quality counterparties. And in order to interact with those regulated institutions, Maker has to come from we have to be professionals, and everybody involved has to seem very professional and buttoned up. And I see that as the culture right now. And I'm optimistic that this is a very professional thing, and there will be a well fleshed out pipeline and process that everybody or anybody can come to MakerDAO as a counterparty and go through. And I think that there's no need to fast track. What's going to happen is that this will perpetually get faster and faster. In the beginning, this is the slowest it will ever be. Let's just put it that way. And then it's going to get faster and faster as we essentially automate this thing. And we have template documents we can just reuse and plug and play. So I understand the urgency. It's an enormous opportunity. Maker needs it. DeFi needs it. And I think that I feel confident. I mean, I'm working every day to make it happen, and I feel very confident we are going to have some killer counterparties, just phenomenal, high quality counterparties, numerous, coming to the table with getting their deals done, getting them I think approved through governance, having model, template, legal structures that are open sourced, and then this thing is going to flow. Like building a road across mountains. We're just building the road right now, but once the road's built, there's going to be a lot of traffic through it.
And this is Christian. Thank you for that, Max. I think the other thing that's helpful for people to know, and Max touches on it, and it may seem easy, but it's actually quite complicated, which is the legal and jurisdictional issues. We are looking at transactions from all around the world, right? So the first thing that I think of is tax, because ultimately, somebody, usually the borrower, almost always the borrower, has to pay withholding tax. So we need to think about, and the borrower needs to think about how we structure for that. If we're doing a deal in Brazil, for instance, there's a lot of different considerations to be considered as to, is the legal entity that gets paid in Brazil, how does that legal entity actually pay Maker? I think for US deals, Success has provided a model. I don't think it's the only model, but as we are seeing deals, as we have to date, coming from different jurisdictions, we need to look at those jurisdictions, understand what the local law allows us to do, because the Delaware Statutory Trust is a creature of the state of Delaware that doesn't exist in a lot of other jurisdictions. Even the concept of a trust doesn't exist in a lot of jurisdictions. Civil law jurisdictions like France don't have necessarily the concept of a trust. So as we're looking at various transactions coming to us, we need to ask kind of all of those questions and understand the cash flow and the implications on the cash flow, how we how the DeFi integration to the real world piece happens. That in and of itself is complicated. And then you have just regular deal documents. And the other thing I would add to kind of professionalizing, one of the things that I've been working on is to make sure that we have law firms that are supporting the real world finance team, law firms that have transactional experience in the particular subject matters. And I am in the process of trying to onboard more law firms that can provide us the support for Max's deal, for instance, where you're talking about an American regulated bank. Well, that's the belly of the beast right now. And we want to make sure that in doing that type of transaction, we have the best counsel advising maker, so that we address all the risks and we address all the issues, and we know what those issues are and we know what those risks are, so that when we prepare the risk memorandum, it is very complete, very thorough, and very thoughtful. So it's very much a process. And as Max said, I mean, it is building, I would even say, a railroad across mountains. Roads might be easier, and railroads are more difficult. And I think over time, we will begin to develop a collection of documents that we can use and reuse for borrowers. But right now we've got, half a dozen different borrowers that are bringing 8 different deals to us. I mean, there's a wide variety, and it just takes time to understand those, assess them, and then implement them.
Yeah, and I'm happy actually. I think just to complement the point that Christian was making, both Christian and I think Max as well touch on it around the professionalization. So one of the very first discussions that I had as soon as we started, I guess, pressing a bit of like a reset button into what we were doing, it was actually a conversation with Christian around saying, okay, if we are to do things properly, then we've got to say not segment, but actually scale up like this the legal part of RWA, because it's actually a critical one, right? Because it's not, if it was probably just about collateral risk evaluation from a credit commercial perspective, probably things could be much faster. So actually nailing on the legal part is really important. So essentially, kind of one of the very first actions that actually I took was actually having a conversation with Christian, saying, can we essentially kind of create something that is a supporting function, and that is essentially kind of like almost separated functionally from commercial and risk, but actually then that can also bring different intermediary solicitors that can actually help us, can help make it to have 2, 3, 4 Christians that understand the law in key jurisdictions around the globe, and that can help create like a panel of those law firms across the globe to be able to scale that function, right? So, and that's currently another aspect that is actually going through implementation, actually through incubation of a legal so but yeah, essentially there was deliberate effort to be able to do it, so that actually that can support every activity from credit and commercial units.
Thanks, Will. If you wanted to hop back in, Max, go for it.
Yeah. All right, guys. So at MakerDAO, we treat engineering really seriously, right? Like software engineering is really serious. Like we wouldn't say that we need to fast track pushing this code to production. This stuff is legal engineering. And we don't want to fast track pushing anything to production because, you know, there's essentially attack surface area, and we want to minimize that. We want to have everything, you know, tightened, buttoned up. We don't want to essentially put a boat in the water with holes in it. So I think the point is, like, we should understand that this is legal engineering happening right now, and we should treat it with the same, kind of the same way we treat software engineering, with the same security principles.
If I might speak to that for a second. So, yeah, certainly when we're engineering, I think safety is paramount. But we do make a number of sort of risk trade-offs, right? So we do a little bit of a calculus on stuff that maybe doesn't have the perfect construction. And we put that out sometimes because we believe the sort of the probability of, let's say the probability is low that it would occur, maybe the risk of impact is high, right? So it's usually like a kind of a multivariate equation when calculating risk. My only suggestion, just, you know, to you guys would just be that the DAO sort of desperately needs to deal with its PSM USDC problem, which is a type of real world asset. We need to diversify that, and I think that we shouldn't let the perfect be the enemy of the good. If we can make calculated risks on certain collateral onboardings, I think we should definitely make an effort to do that. And I'll give maybe one. I think I've done this on a governance call before, but there's definitely something to the mantra of asking forgiveness rather than permission. I've noticed through a lot of the companies that I've worked for that trying to find the, you know, to be in complete compliance or go by the letter of, like, let's say what the internal legal teams suggest, often leads to those corporations being like not competitive and stagnant. And that's because if we lean too hard on the sort of risk averse aspect of the DAO or, you know, this, we're less likely to get anything done. So, you know, taking that into account, I would just say, like, let's try and really assess like how much risk exposure we think there is. You know, we've got a surplus buffer. MKR holders can maybe decide of if they want to lose some of that surplus buffer. We certainly do this with normal, like, collateral onboarding. There's risks when we talk about L2s. And we, you know, we try and sort of scope that to like exactly how much possible losses could occur in the surplus buffer before we had to like dilute MKR holders. And I think we should make probably similar assessments here. Like, you know, if we've been working with people for a good chunk of time, you know, Success would be a good example I can think of. We've worked with them for years. You know, there were a lot of discussions in the foundation. Like, we've done software engineering. Matt's put an enormous amount of time and money into the sort of legal constructions. I would definitely say, you know, we have more trust that's built up over the years that we could lean on in that case. Even if maybe legal constructions aren't going to be perfect, we should definitely take into account how big our risk of USDC is, and really do our job, which is to try and risk manage the collateral basket that backs DAI. So that was a lot there. I may have said a couple dumpster fires. Apologies.
Yeah, this is Christian. You know, in terms of legal being perhaps the delay, I can assure you that that's not the case. I've been doing this for 25 years. I've worked on transactions in over 40 different countries. I've told anybody that wants to talk to me, I'm a deal junkie, and that's what I like to do is the deals. So from my perspective, the way that I approach it is, how do you get a deal done? The other thing that I would say is, when I was in Japan, working at a law firm in Japan, and I had first-year law students come to me and say, hey, I want to come work in Japan and get my experience in Japan. The first thing I would say to them is, don't go to Japan first. Start in New York, start in London, learn the basic ABCs, learn how deals should be done, and then come to Japan, come to Asia, go to the Middle East, go wherever you want, and learn how, and then see how deals are done, because there's flexibility outside of, the basic ABCs that you learn in New York and in London. So I think there is a balance. I have no doubt there's a balance. But I can assure you that my personal level, like I said, I'm a deal junkie. I like to find ways of collaborating and getting deals done. But sometimes deals don't get done because they shouldn't get done, because there are gaps, because there are holes, because there are, problems. So, I think we just need to be, mindful of that. And, the intention that I have in setting up a legal core unit is along the collaborative getting deals done, within reason approach, because I think that's what Maker wants. And, that's how Maker succeeds, is by bringing on transactions, but it also succeeds by not losing money. And that also has to be balanced.
Go for it if you got something, Max.
There's two types of risk. There's this counterparty risk and there's the legal structuring risk. I think that we've actually been delayed on the counterparty risk because essentially we have some real top-notch counterparties that have actually, approached these core units and us. So we know the type of quality we can bring here, and we're just like, and so I think that the delay has been not wanting to just let in lower quality when we have the opportunity for such high quality. And so even if it takes another couple of weeks, the high quality is going to be worth it. And it's like I do sales, right? And it's like, if you want to have $100 million of revenue as a salesperson, you can't do that $100,000 at a time. You want to be looking for the $10 million deals. And it's like, if we want to be capable of deploying, if Maker wants to be capable of deploying essentially billions of dollars, if not, an enormous amount, we want the biggest, highest quality counterparties and the fewest number of them to manage, potentially. I mean, this is a philosophical question for Maker, but at least from a management standpoint, fewer, higher quality counterparties that we can do larger business with is much easier to manage than many smaller and lower quality. And we have limited bandwidth as a community, as a, in terms of engineering. We want to just focus on the biggest opportunities.
Makes sense. Thanks everyone for those comments. Did see one question a little while back from Katie, who was asking basically what our process, or if there was a process for onboarding real world assets. Happy to let Will talk about his view on this. I can say from the governance side, up until this point, we haven't had any MIPs that like kind of direct the treatment of real world assets differently, which is why we've been kind of applying our regular collateral application process to real world assets, with the major difference being kind of who issues the risk report there, and the fact that the risk report is potentially much more difficult to issue, as it involves going into closed books, the legal structures, all the kind of challenges they've been talking about. So obviously anyone can propose a MIP, and Will, in fact, was one of the new MIPs put up last night. Basically put forward to kind of guide the process slightly differently for real world assets collaterals. I don't know if on that a little well or not, but just wanted to give the governance take there.
Yeah, sure. Yeah, let me know. I saw that there was a couple of comments in terms of audio. If my audio is not getting through, let me know. Okay. So yeah, the MIP6 application process is as the existing MIP6 as the existing MIP6 application. So that doesn't change. Once so what that entails is actually there is a MIP application that any counterparty can submit and then be treated by the existing, I guess, team that is in there. It doesn't mean that it's is the only team that is going to be there forever. In fact, we're working diligently, and hopefully that can dedicate a little bit more time to also scaling up the function, and at least the beginning is with the legal part, because it's an important one. So what we've just realized by working for now more than a year with that existing MIP6 application process is that the understanding, I think, of the counterparties of like requirements for a full-fledged MIP6 varies. So you have counterparty that have full understanding, and just by looking at the questions there, that by the way we updated a few months ago on MIP6 application, was just about kind of like a check boxing exercise of answering the questions and then I guess essentially be done with it, without kind of, I guess, understanding the context of what is it that it was required to have transactions that were on par to market standards. The question is still the same, relevant, but it's just actually the depth of how they are answered that was probably not there. And what we realized then through that long and painful, I guess, experience is that then the fact that those MIP6 were put together and then I guess put to vote for prioritization, which the existing MIP process is the green light vote, right? That's when you kind of you sign to the teams. This is priority. This is priority. This is priority. This is not priority because we haven't kind of green lighted it. So that sorry, kids woke up. Yep. Sorry. So that MIP6 application process essentially so essentially means that the process is still as it is, but we just realized that there were, I guess, shortfalls in how it works operationally speaking, right? So we even like for applicants that were getting through the process of actually submitting the applications, you can like when they being, I guess, supposedly like proactive, engage to the team, and we kind of like gave a little bit more, I guess, guidance in how to structure it. And I think the very first guidance that came in this process of resetting and professionalization over the last couple of months is the MIP6 methodology for structured finance transactions that is in the form, and that wasn't like to say, okay, the MIP6 process asks you to, I don't know, answer a set of, say, 15 questions or so. But what we mean by that, it's X, right? It's the methodology of requirements. If you can actually put things that actually mimic that, it will, I guess, make your application much more, I guess, complete, and not only for a team in particular, actually will give the flavor for MKA token holders to make, I guess, a more, I suppose, like a more informed decision on what is it that they are telling teams to prioritize versus, hey, this is a, a marketing piece that has very little information in it. Because once the existing, if it's not, I guess, done to a reasonable degree, that is slows down actually the process. I think that is the key. If I had like a key message, is like a MIP6 application that is drafted, I guess with low standard of quality, it actually slows down the process simply because once it goes through green light, it takes as much the time that it took, or 2, 3, 4 times more time than the time it took for the original proposal to come through. For the once the diligence actually really starts to say like, okay, this is what it provided as MIP6. We've got to work on a lot of details on this to be able to assess it, right? So it's actually kind of the issue that we realized is that the MIP6, the post MIP6 for MIP6 that didn't kind of like have some sort of guidance, is that they would essentially have to rework the MIP6 to get to some level of standard that we could have a view to assess it. And that is essentially kind of like it's a realization. But saying all of that, I mean, MIP6 are still and will remain forever an open process. So projects can and should go forward if they have a proposal that they really think is in line with the Maker protocol and submit it. It just means that they just have to realize that when it comes to, I guess, treatment of it, there might be some rework done, and which I think from a borrower perspective might, I guess, increase their costs, because that means that they potentially be doing the same thing twice.
Hey, Will, it's Eric. I'm on RWA. Just want to make a few comments. I think there's a question really here of risk appetite and standards for Maker. On one hand, you could say, hey, here's a great investment. It's venture equity. This is the next Google. You're like, okay, we'll make a good return. But the other issue with Maker is that we need to back to die with very stable investments. That peg to the dollar is relentless. And so essentially we're issuing these demand deposits that people can cash out at will. So you need to have real solid assets that can be liquid quickly to honor that. And so I don't think the community honestly has thought through yet what it needs in terms of a risk appetite. I mean, we're showing what we think makes sense, but to get these kind of high quality investments that can be pretty turned into cash reasonably quick, you can't take a lot of risk and you don't make a lot of return on them. What we've been, I think, proposing and guiding on is saying, look, let's do high quality investments, and let's, also kind of look at where the real world, is investing. We don't need to do the same stuff, but if in the real world, someone brings us an investment in the real world would do this deal only if, say if it's $1 million deal, and they say, great, I'll give you a $800,000 loan, but you put in the final 200,000. A lot of times we'll get counterparties coming to us. They'll say, give me $1 million, and I'm not gonna put anything under it. It's like they're asking Maker to take a whole lot more risk than the real world would. And that's going to be a fundamental question of why. Maybe the real world's off on this. You can always innovate. But then the fundamental question, at least in our mind, becomes what basic rights and principles as a lender should make her give up that in the real world it would insist on. And I think there's some difficult discussions here, but we're typically trying to look at things versus the real world. And again, you don't have to do it exactly the same, but if there's markedly more weaknesses in what's being proposed to us versus what the real world would do, I think it asks some really key questions. Over the last hundreds of years, lending is a business. I mean, it still needs to improve, but there's some basic principles, about lending. It's easy to lend, it's hard to get paid back, but how you can kind of manage that risk. And we generally want to be open to innovation, but we also want to use those basic lessons because people have lost money over the centuries kind of, learning these things. You want good collateral. You want more collateral than the loan. You want to be able to see the collateral. We're asking for kind of very basic lending 101 things. And some parties honestly are pushing that we don't ask for the basics, the tried and true stuff. And I think that's a fair ask, but that I think the maker community needs to know what their ask is and why we view it so off market is like what the real world has done historically. And then I think it needs to put the onus on the borrower to explain why, hey, in this deal, you don't need to have any first loss money under you. Every other deal in the world like this would, but we're special and different and you don't need first loss protection. But I think we struggle a lot with that, is trying to find the standard that the community wants and supports, and that the community wants us to take very aggressive lending standards. I mean, I guess we can, but as I like to tell people, I think Maker has some profound innovation going on, but we don't really want to innovate in ways to lose money as a lender. I mean, there's a lot of those. We don't need new ones.
Eric, can I ask you something? Because probably as many of the people that are here, we don't understand that much about the risk about certain asset originators. And we were at least I was surprised when I read the risk assessment of Monetalis and you suggested a zero debt ceiling, because usually what the risk team does with crypto collaterals is okay, this collateral is super risky, so we just give them a lower debt ceiling. So I was wondering, maybe, I don't know, I just want to understand.
Can I respond to that? I think that's a great one.
Yeah.
I think if someone came to you with something really risky, you would charge more, correct? But do you also adjust the advance rate, so to speak? If I've got a super risky coin, you're not going to give me 80 cents advance rate. You might say, I'll give you 30% advance rate. Is that fair?
Yeah.
Monetalis is basically asking for 100% advance rate, where in the real world, maybe they would get 80 or 85% advance rate. So if you read our assessment, I mean, you're not in the field, but if you look at our observations and risk pointers, you could flip that and say, hey, is there a deal here they would say makes sense? There probably is, but it's going to start with real first loss money underneath us, right? I mean, just everything we say negative, you can just kind of think, wait a minute, how would I make this work? How do I structure or change something that these guys would say, oh yeah, okay. You guys, if we say you guys don't have anyone who's ever really run a credit fund, really understands as a deep credit manager, that's an easy thing. It's easy to understand in our mind what would fix that, correct?
Yeah.
So we're just laying out principles. When I was saying, one of my going on before about there's just basic principles in lending, just how not to lose money. I mean, we're basically lining those basic principles up and commenting on, say, I don't want to pick on Monetalis, but on how they stack up against those key principles, like the manager quality and experience in the asset, the money or first loss position underneath us. Is there an existing platform, that can manage all this business, or are they starting up from zero? We're just kind of ticking down, the usual list of what are all the ways we could lose money. Is that helpful?
Yeah.
And what have they done to mitigate these? And what have they done to mitigate these?
Yeah, that's super clear. Yes, I was I was thinking that it's probably you can compare it with a token or a project without an audit. Maybe for projects like that, you you wouldn't consider not even like a 1 million debt ceiling because it's too much risk. It will be something like that, right?
Hey, Will, I think we got a presentation we've drawn up that maybe we should give to some people where we actually walk through what is it like being a lender, a maker crypto lender versus being a real world lender. And we look at what's similar and what's different. And then we try to, show like in the real world, you don't have liquid assets. You don't see their prices. You can't grab them and sell them easily. So then the question becomes, if we don't have some of these really strong principles that you can use in crypto lending, what are our compensating factors to help manage the risk? Because we don't have that nice liquidity or price transparency. And so we've actually made a presentation and applied it to Monetalis and gone through that. I'd like to think very systematically and say, hey, this is how we think about it.
Yeah, thank you, Eric.
I'm happy to share it.
Yes, please. I think that helps. Thank you.
I mean, I think we'd like to be open and transparent. I feel like we should be more involved with discussing how we form opinions and listening to, differing views, but we certainly want to show you kind of how we look at things, and so people can understand why are we, viewing this like X, like trying to show you what the glasses are that we put on when we look at these things.
Yeah, I think that's a good point, Eric. We definitely should make actually the effort to maybe have like a focus on session. We did that focus on session on the methodology a couple of weeks ago, and I think it would be valuable actually as well to have a similar session on the topic. Definitely.
If I had my preference and it would never work, I'd say anyone who's interested, let's go away for a week and have 8 hours a day going through structured finance in great detail. I'd probably get 3 people showing up, but there's a lot to do.
Yeah, I don't think we're going to have like that kind of bandwidth working
I know.
remotely, but I think given that we're like just we probably should just have like a session where we can. I think a lot of that is about educating, because at the end of the day, the worst thing that can happen, I think that's part of why some of these discussions and noise have been bubbling up, is the feeling of alienation. And I think we should make every possible effort to reduce any sort of feeling of alienation in the community. So yeah, I think that would be very supportive to have a session like that.
Still got something, Max? Feel free to hop in.
Sure. Eric, count me in for that offsite.
Oh, I love you.
You mentioned that there are principles. One of the principles of banking or lending in the real world that I'm aware of is the golden rule, which is he who has the gold makes the rules. Maker has the gold. Maker has the gold. Maker should not be bullied by the borrowers.
Yeah.
And that is a really important principle.
Yeah. Yeah, I think that's, if I had to pick one principle, and I hadn't heard that said before, I think you picked probably the defining one, where the lender should design his own lending strategy, and you really don't want the borrowers telling the lender how to view risk. Well, you don't, if you're the stockholders and the lender, you don't want the borrower to dictate terms. If you're the shareholders and the borrower, you would prefer the borrower dictate terms.
Good piece of advice to end on, perhaps. Noting the time here, we are running up against our allotted hour and a half. If there are any last comments, questions, or suggestions, I'd encourage you to voice them now. Well, huge thanks to everyone who helped put this together. Thank you to our speakers, to everyone commenting on this and engaging the discussion. Let's keep the chat going in the forum as well as on our Discord channel. And yeah, appreciate you all coming out here.
Will, I think we've got our RWA office hours tomorrow, I believe. So please show up. I mean, I think we want to be over-inclusive. We prefer people say, just shut up about structured finance. We don't want to hear it anymore, as opposed to being perceived as not open.
And what time are those office hours?
Yeah, that's correct. So we have like a Thursday 7
What's it in
5
London time, Will?
Yeah, 5 p.m. on Thursday UTC. So on a weekly basis. So we have like an office hours out there to be able to essentially to have these types of discussions, but maybe with more depth as well. So and then people can just tell us to shut up because they're tired of actually hearing the same things over and over again, or just have any thoughtful discussions from both the borrower or the lender side of things and how we look at them.
Awesome. Thanks for the chat out. We'll close it out there and see you all same time, same place next week. Thanks.
Forward to it.